Hello and welcome. You're watching us here on Halftime Report. It's halfway through the trading session and it looks like a lot has happened in that first half of trade. We started well. We started weak, then we saw a bit of a recovery, and that recovery is getting sold into. So it'll be interesting to see where it goes. I'm Manglam Malu. With me is Sonia Shinoy. Sonia, we did well, saw that recovery, and maybe now things are getting jittery because the one thing that stands out is the way volatility has increased. The India VIX is up, what, 11.5% as we speak?
It is. But, I still believe that this is a market where the dips will be bought because we do have, the lows was around 17,485. I agree that now it's getting a bit volatile. But if you look at individual stocks, right, even from the frontliners, there are plenty of stocks that are still well in the green and are bucking the market trend, whether it's the NBFCs. Bajaj Finserv has been the biggest gainer. A lot of the domestic-facing consumption stocks, so whether it's Tata Consumers, Asian Paints, you have Eicher Motors, Titan, Hero MotoCorp, M&M, this whole lot. Of course, autos have done very well. In fact, on that note, let's talk about steel strip wheels, because this is one company that has reported a very strong 15% growth in monthly sales. In August, the alloy wheel sales have gone up 100% year-on-year, while the truck segment has seen an 80% rise. Even in the quarter gone by, Q1, the revenues went up almost 50% and the EBITDA was up about 15% or 12% rather. So looking good there. Mohan Joshi, who heads the corporate strategy and investments at Steel Strip Wheels, joins us now to talk about that. Mr. Joshi, good morning and thanks a lot for joining in. If you can start by telling us about the month of August, because the sales went up by 15%. You've seen very good traction across the board actually, with trucks and alloy wheels doing the best. But where do you see big demand coming from for the rest of the year, and what could the average growth be?
Very good morning and thanks for having me. For the month of August, we did close to 15% on the top line. In the primary demand, which is getting driven by the PV side, which is very, very strong, backed by the backlogs of orders of all these car makers in the country. I think the month is a little subdued than our expectation on account of very heavy rainfalls in parts of the country where CV contributed a little less. And we feel that this is what is going to be the most pivotal part for the balance of the year, that with festive season coming on, CV will start contributing towards the balance 6 months. For the full year, we feel that all the segments, be it PV, they will contribute maybe growth of us. CV will contribute close to 20 to 22% kind of a growth. Tractors will contribute close to 7 to 8% kind of growth. On alloy side, as I said, it's the strongest vertical of our business, which is running at full capacities and is expected to run down at a pace of 45 to 50% growth. And what I feel is that for the full year, for the organization, we feel we are going to be growing at between 15 to 18% on the top line. And the sour point is still the exports, where some bottoming out is happening because of these geopolitical issues. And we feel that the worst is over and behind us, and slowly and gradually going into the H2, you will see green shoots coming in from the export side also.
Right. I'm just looking at a couple of numbers. You said that you are looking at 15 to 18% growth overall. At 18%, you would do roughly 40 to 50 crores in terms of a top line this year. Is that correct?
Yeah.
But
yes,
that would mean a decline from your earlier guided band of anywhere between 4,800 to 5,000 odd crores, because earlier, the last conversation that we had, you had guided for revenues, domestic revenues, between 41 and 4,200 crores, whereas exports, you said, would decline from over 800 crores to about 600 crores. What's your sense? What will lead this, cut in the guidance, so to say, and how much will you end up in this year as far as exports are concerned?
So, just to clarify that guidance, the earlier last year turnover was close to 3,500 crores, which was anticipated at between 4,500 to 4,200 crores, in which the exports are 600 crores. So it was 3,500 plus 600 crores, which was at 4,100 crores guided last time, which is now at 4,200, 4,250 crores that we anticipate.
Okay.
And exports, what's your guidance from this year? How much will you do?
See, we feel that around about 600 odd crores will be the exports for the financial year 22-23.
You had also told us that your EBITDA, FY23 EBITDA is targeted at 450 crores. But this is actually less than what you did in FY22. FY22 was about 466 crores. Is it because of the margin pressures? Now actually raw material prices have cooled off. So would you want to change that guidance on the EBITDA front?
I think for the full year, we guided that it is going to be between 500 crores plus minus 5%. And we feel that between 475 to 480 crores is what the anticipated EBITDA for the financial year.
So, Mohan,
So
we
the
can't.
previous year, we had the margin of 466 crores worth of EBITDA. So on an annualized basis of these one-offs to be taken out, I think EBITDA will accrue and grow at close to 20%.
Okay, so 20% growth on the EBITDA front is what you're expecting in FY23. The reason I ask is because you're also supplying to a lot of the fast-selling new age products, right? Whether it's the Tata Nexon in the EV space or the Tata Harrier. You have companies like M&M that you supply to that are having, exceptional sales this month around. So I just wanted to know from you, have your margins, your blended margins, will they go up? Has the kit value gone up for a company like yours? And can you sort of sell, to these higher margin products or to these higher margin cars and hence improve your operational performance by the end of FY23?
So what I feel is that if you compare it over past 2 years, we are at the highest EBITDA per wheel kind of a matrix right now for the company. And that is also going back to the history that it has never been done that way. And the anticipation for this financial year is that on a operational matrix in terms of absolute EBITDA per wheel, we should be improving on the last year's financial performance.
So what is the EBITDA per wheel currently?
Can you please repeat that?
What is, you said it's the highest EBITDA per wheel in the last 2 years. What does it stand at currently?
I think it's a little sensitive subject.
Okay.
So as you say that, we did close to 11% in terms of absolute EBITDA last year. For this financial year, I think we should be adding up close to a 10% improvement on this. And the absolute EBITDA that we are trying to target over, short term to medium term is between 12.5 to 30.
Okay, we take that point. Can you give us a sense of the alloy business itself? You are saying that it'll be around 45 to 50% growth that we see. What is the contribution of that? And because the plant's running at full capacity, are you looking to add some further capex there?
So as the plants are running already at full capacity, there is a capex which is going to be done over next 7 to 8 months to add close to 1 million capacity. With the order flow which is visible to us over next 12 months, as soon as this capacity will come, close to 60% will also be sold out. So inorganic as well as organic opportunities are being eyed by the organization, and because it's a future in terms of the business, and it has a lot of growth potential on exports. So obviously the organization will continue to look into the opportunities for growing capacity.
Mohan, if you could give us some more details on that. Mohan, how much does it contribute right now to your overall revenue, alloy wheels? What is the current capacity? And, what is the margin differential between alloy and the other parts of your business?
Okay. So on the last year's benchmark of 3,500 odd crores, we did close to 700 crores coming in from the alloy side. Steel versus alloy, there's an absolute margin difference of close to 500 basis point, which is where the alloy is at a 500 basis point higher than the steel. And that's why these EBITDA accretive business is a core where domestic as well as export markets are being eyed. I think we have done fair bit of success in steel wheels by penetrating global overseas markets. The similar kind of trend will be seen over next 2 to 5 years for exploring these markets for alloy wheels also, because customers are the same and they have steel as well as aluminum demand, and that's where the focus is.
Okay, for many years, you've been known as the steel wheels, alloy wheels company, right? But I understand that you're also looking to get into the sale of new products like motors as well. Tell us a little bit about that. I think the last time you said that that's a potential 1,000 crore revenue business. By when do you think you can start, and what are the other, what is the expansion that you're planning?
I think the core capex in that, is not going to be very large. Because it's a kind of an opportunity that we are looking for futuristic growth into the EV space, because wheel is getting made by us. So if motors can be accumulated, that customer benefits the most. And because China is a dominant supplier to India currently, and we feel that India has all the capabilities to get into this business and move forward. So we are sticking the benchmark right now, and we feel that over next 2 to 3 years, this is a great opportunity to win this business if you believe in EVs. especially on the two-wheelers.
Right.
Industry has the potential of a top line creation of close to 1,000 crores. Currently, we are in talks with many agencies, and obviously the talks are premature. Over the next 6 months, these premature talks will mature, and we'll keep the street updated on this.
Right. I remember you had said that you will announce a JV or a tie-up in the next couple of months. So we'll await further clarification on that. Final question, promoter pledge is at around 17%. Where do you see that go? It has reduced considerably over the last 12 months or so. And secondly, Tata Steel still holds about 7% stake in your company. Will they continue to hold? Any conversation from them to maybe, sell that stake off?
So Tata Steel is a strategic investor and probably 70% of the supply to us in terms of the input steel. And I think that relationship goes much beyond the stake, and they hold a critical, engineering importance for us also. So there is no talks of any dilution of their stake. That is one. The second thing is that pledge was reduced from 52% to currently at 17.5%. I think for the full year that we are trying to guide is that this should be brought below 5% by this financial year end.
Okay, all right. We will leave it at that. All the best and thanks a lot for joining in. That Steel Strip Wheels